Let's talk about Dis-Chem, which is a recently listed large format pharmacy retail group. Market cap here 23.5 billion rand, price to earnings ratio of 36.6 and a dividend yield of 0.3%.
So the Saltzman family listed this business recently. Everyone got very grumpy because in the listing book build they didn't give anybody any shares. That was kind of very tightly held. And it's since moved higher. Yes, Ivan Saltzman is the main man. And then his wife, whose name I'm sure I've written down here as well. I can't believe I haven't. She's the one who runs the foundation, is often on the radio dishing out sums of money to support good causes. I'll think of it while we go on.
Did you participate in the listing?
We tried.
So you were one of the grumpy investors who couldn't get their hands on it.
Yes, because it's such a good company and the growth profile is amazing, and we trust that they're actually going to deliver on what they're saying. If they're saying they're going to, these guys are conservative guys. If they say they're going to roll out 100 stores, they're going to roll out 100 stores or maybe even more.
Let's look at the share price graph, Chantal, and see what has happened.
It's only since December last year, but you can see it's up a huge number of percentages.
Yeah, it's up 48% since listing at 18.50. Yes.
18.50 was the price at which it was placed in the so-called book build, and then it's now trading at 27.
Did you manage to get your hands on some?
No, of course not. We're far too small. She works for FNB Securities.
And if they couldn't get their hands on, there's no chance you're going to get your hands on it.
Exactly. We're like a pea shooter on the comparative.
All right, so where to from here?
So a very cool thing about Dis-Chem is that they've got really good trading density. So even though they've got the large box formats, they actually have more people shopping there at any given point in time than at your average click store. One of the other things that they also have that I quite like is they've got the potential to improve on some of those key ratios in their balance sheets and cash flow statement. One being, and one very important one being, working capital management, which means these guys should be turning over inventory a lot faster, and they probably can. They should be paying their suppliers quicker, and they should be demanding payment quicker as well. And if they can fix that, things will start really pumping for that business from a cash flow perspective. And as we know, we value companies based on cash flow.
Well, that's it. We're out of time for the show. Did you know that?
Yep, I'm afraid we have to go.
Not.
Yeah, no, it's hot because of the category, but it's caution, it is expensive.
Hot, Paul?
And there's just a little bit of a concern about family-dominated control companies, but I'll give them the benefit of the doubt. Definitely hot if you can pick some up. Good idea.
And there's the caveat. If you can pick some up.
Liquidity will be an issue.
It is the issue.
So now